Okay. So you guys said the technical analysis video, you guys want it to be complicated, have you?
Yes.
Yeah.
Okay. So I'm going to explain it now.
Oh,
Please, I don't want to have to mute everybody. So please just, I don't want them to
Sir,
be talking.
I think it's best you mute us all. Then whoever that wants to talk should like raise their hands. So I think it's best you mute us all.
Okay, okay. Everybody then. Can you guys hear me?
We
yeah,
can.
yeah, 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 yeah. I can hear you.
I'm trying to mute everybody. Well, okay, ready. Um,
Yes, I can hear you.
so I want to explain the video I sent, which is identifying market structure. So I want you guys to, after tonight, I hope you guys can actually understand and
I
identify
can hear
yourself.
you.
Exactly. So everyone, please, once you join, just mute yourself. So your audio will not interrupt me as I'm talking. So let's start market structure. Where do I want to start from? We've been talking about Forex things. We've been talking about what Forex is. And I said in Forex, you're basically trading currencies. You're buying and selling currencies. That means you're predicting, when you're buying a currency, you're predicting that the currency will rise and you will make profit. And when you're selling the currency, you're predicting that the currency will fall, so you will make profit. The price of the currency will fall, so you make profit. So the basic idea behind that is that you want to be you want to be buying when price is going up. I want to be selling when price. I hope everybody can see my screen. I should not be talking to myself. Can you all see my screen? Just drop in the chat box if you can see my screen. Okay, sounds good. So as I was saying, I said in Forex, yeah. I said you want to be buying when price is going up, and you want to be selling when price is coming down. This is a price chart. A price chart tells you, it indicates movement of price. It tells you when price is going up and when price is going down. On your normal trading view, what traders basically like to use, there are different types of charts. We have the candlestick charts, we have the bar chart, and we have the line chart. On trading, right now I'm using the candlestick chart because that's basically what is best for you to use. Some traders like to use the line chart. This is what the line chart looks like. But the line chart doesn't give you enough detail about price. You can just see, just telling that price is just coming up, going down, coming up, going down, coming up, going down. You're not really getting enough information with this line chart. Then we also have the bar chart. This is what the bar chart looks like. The bar chart is kind of similar to the candlestick chart, but it doesn't give you as much detail as the candlestick chart. There's an aspect of the class where I'll talk about candlesticks basically, so you guys will understand candlesticks better, what all the different types of candlesticks mean. But for now, we're going to use and stick with the candlestick chart, which is what the traders use mainly to analyze price movements. And it shows you how price moves. This is USD/JPY. This chart we're analyzing USD/JPY. And as you can see, price is coming down, goes up, comes down, goes up, comes down, goes up. In Forex generally, price doesn't just come down straight. If price wants to go from point A, from this point to this point, you can see that it didn't just come down at once straight. What you should do is come down, go up a little bit, 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 then come down to the final point where it wants to get to. That is how price moves in the market. Are you guys following me? Please let me drop in
Yes.
if you are following. Please, once you join, mute yourself, please. So mute yourself for once you join. Because I was saying, I said price doesn't just people are just doing. As I was saying, I think price will just if price wants to come down from this point all the way down here, it will just come down straight at once. It doesn't usually happen like that. What will happen is it will come down, go up, come down, go up, come down, go up. That method of movement is what we understand to be market structure. It's the same thing way if price wants to go up. You can see here, price is going up. If price wants to go up, price will not just it will just shoot up from here to here at once. It will go up, come down a little bit, 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 then back up to its final destination where it's going to go to in the first place. And this is what we refer to as market movement, basically. And as a trader, what you want to do is you want to know when the price of the commodity will either rise or it will fall. That's basically how we make profits because you are buying and you're selling. You want to know it's like you selling something as little as phones. If you want to sell your phone, you want to buy the phone when the phone is still cheap, obviously. So the price can go up and you make a profit for it to sell. That's how it works. So what you they what talking about technical analysis now, and technical analysis gives you the edge to know when price is about to go up. So you can buy at exactly when price wants to go up. Are you guys following me?
Yes, sir.
Oh, more of this one.
Now they sit down, they look at her, she look at it. Why she don't pay attention? She dey sharp to this game. She dey sharp for her well. Start her back so that if you tell me to do. Now sister, and it's to cover. Oh, she pounds. No, did I come back?
Please, you guys should mute yourself. You are distracting our class.
Huh?
Then they waka, yeah, but I point. I know they
No,
hear
I
anything, safe.
I still do.
I know they
Huh?
hear anything.
I said I still
No
there. I
be-
still there active. I still there active.
Please, you guys should mute yourself once again. Yeah, hearing you.
You mute yourself, I beg.
Abeg, Mona no dey shout taxi for you, abeg. I just dey
Mona,
shout.
if
I'm
you
not,
want shout active, go
I'm
TikTok, go
I'm
dey
not even
shout
the one
active
feeling
now.
chat, so I don't know what's going on.
Mute yourself, mute yourself. Is that an English that you cannot understand? You know if you understand English, Emmanuel, wetin be your name? You dey
Emmanuel, this
shine
Emmanuel
teeth.
just
Who dey
anyhow
follow
for
you shine teeth? If he doesn't want to follow rules, I bet should remove him, please.
I no just see compose for once.
I don't understand where all these people are coming from. Man. Who can help
I
me?
don't even hear anything. So
Can you guys see my screen?
Emmanuel, you dey craze. Mute yourself. Are you okay?
Can you guys hear me? Can you guys hear me?
come force me now, give the kill you.
Hello, sir. We can hear you, but there's like students distracting us here. Please, can you, if you can, tell him?
I'm trying to figure out why I'm seeing scribbles on my screen.
Okay, all right.
Sorry, hold on, please. Can you guys hear me now? If you can hear me and you can see my screen and it's clear, please drop it in the chat box. If you can hear me, you can see my screen, it's clear. Let me know in the chat box. Please
Yes, we can hear.
don't insult each other, I beg. Please. Okay, good. Let me continue. So I was saying that as a forex trader, you want to know when to buy and when to sell. And one of the things that helps you predict when to buy and when to sell is understanding market structure. That was the purpose of the video I sent on Telegram group. And the market moves basically in three forms, three ways. We have one, the uptrend. We have the uptrend where price continuously makes higher highs and higher lows. This is what an uptrend looks like. In an uptrend, price will be creating higher highs, higher lows, higher highs, higher lows, higher highs. Are you guys following? Is everyone following me? Please, you can see my screen. You can hear me. We're on uptrend. We're talking about uptrends right now. Okay, good. So I say the market moves in three phases. We have the uptrend, we have the downtrend, where price is coming down, and price will be creating lower highs, lower lows. And then we have the sideways trend, where price is just moving in a range. So that's why even as a ranging market. So we have three types of market structure. We have the uptrend, the ranging market, or the sideways trend. And the downtrend. Those are the three major ways in which the market moves. Are you guys following me? So in any price chart you open of any commodity, if either market is is either that commodities in an uptrend, that means price is going upwards continuously. And like I said, price will not just go from point A to point B at once. It will go up, come down a little, go up, come down a little, go up in an uptrend. And in a downtrend, it won't go from point B to point A all at once. It will go up, it will go down, come up a little, go down, come up a little, go down. So now, what do we have two phases of the market. One, which is called the impulsive phase and the retrace phase. So in an uptrend, the impulsive phase will be the upward movement, while the retrace phase will be the pullback. This short downward movement before price continues to go up. So I've mentioned 5 things now. I first talked about an uptrend. I said that uptrend is when price is continuously shifting upward. And a downtrend is when price is continuously shifting downward. While the emerging market price is just going about around the same area. And I said in an uptrend, price continues to make higher highs and higher lows. Let me identify that structure for you now. In an uptrend, we have here at the bottom, we have a low. The low is just the lower point of price, and we have a high. Then price retraces down a little bit to create a higher low. Why is it a higher low? The higher low because this low is higher than this previous low. And it goes from that higher low to create a new higher high. And so on and so forth. So in an uptrend, price is consistently creating higher lows, higher highs, higher lows, higher highs. Are you guys following me? But the reverse is the case for a downtrend. In the downtrend, we have a high, and we have a low. And then price continuously creates lower highs and lower lows. Are you guys getting me now? So I said,
Yes, sir, we are.
okay, I've been mentioning a couple of things. I said price moves in 3 phases: uptrend, downtrend, ranging market. In an uptrend, price continuously creates higher highs, higher lows. In a downtrend, price creates lower highs and lower lows. That is how you identify an uptrend and a downtrend. Are we all clear on that before I continue?
Yes, we are.
All right.
Yeah.
Now let me show you guys what an uptrend and a downtrend looks like in the market. So this is USD JPY price chart. And you can see that here price is falling. And when price is falling, I say you are in a downtrend, basically. How do we identify a downtrend? We see price consistently creating what? Lower highs and lower lows. We have a high here. Price came down here, it's create a low. Price could not go back up to break this previous high. What did it do? It came here, created a new lower high. This high is lower than this previous high. After creating this lower high, it came down here to create a lower low. This low is lower than this previous low. So we've identified that we are in a downtrend. Are you guys following me? And it continuously continues to create lower highs, lower lows, lower highs, lower lows, lower highs. I'm sorry, lower low here. Is that clear? So that's basically what market structure is. And just beside it right here, we have an option. We have price moving in an option. Here, we can see price creating. This is a low. Came up to create a high. Came down to create a lower, a higher low. This low could not break this previous low, which is higher than this one. So it's called a higher low. Went up to create another high. Came down to create another low. Went up another high, another low, another high, another low, all the way here to another high. So this is an example of an uptrend. This is an example of a downtrend. Let me see if I find out if I'll find a sideways trend. Yes, this is an example of a sideways trend here. You can see price failed to break below this zone and above this zone, up until this zone, this level here. Price came here, from here, came to this place, up here, back to this zone again, before coming here and breaking above. So this is an example of a sideways trend. It could be longer. Price could range like this for a while, continuously for a while, depending on whatever is happening and influencing that particular point in time. But in this example here, it was for a short period of time. So can everybody identify the three stages of the market now? You guys know what an uptrend, a downtrend, or a sideways trend is. If I continue, or you can unmute yourself to ask me questions now. Don't make you out the three.
Sorry, sir. Please, can you throw more light on that range market?
On the ranging market.
Yes, sir.
In the ranging market, price is basically stuck in the loop. It's like a sideways trend. We have two zones that price is finding it difficult to break above. Like in this example, there's one zone here, and there's another one down here. Are you with me?
Yes, sir.
So you see that price came up to this zone, hit this zone, it did not break above this zone this first time. Came back down here, it did not break below this point. Went back up to this zone again. 1, 2, 3, 4, 5. It is 5 times, could not break above it. Came back down to this place, still could not break below. First time, second time again. But it now finally broke above it. So in this at this particular period of time, you can say price was in the range. But it was not giving us an obvious direction. It was not going up, it was not coming down. Do you get?
Yes, sir.
So it will be when price is either in an uptrend or a downtrend, it is called a ranging market. Do you get it? Is it clear now?
Yes.
Okay. So do you have any other questions? Being the sideways trend with the price is really be a terrible idea to another one. No. Some people like to okay, we're going, that's what we're supposed to move on to now. Knowing when to buy or when to sell. Some people like to, in this sideways trend now, some people will buy at the bottom of the range and sell at the top of the range, basically. That's how people trade in the sideways market. But in an uptrend, before I move on, nobody has any question about identifying market structure, uptrend, downtrend. Nobody has any question.
I have, sorry, sir.
Okay.
I have more question. We're not seeing the market structure, the full, how to identify an uptrend. Here now you gave example of a downtrend. So I just want to know if you can give us example of an uptrend also, so that we're able to identify when it is
I give
when the market.
This is an example of an uptrend. I give it right here. I said in an uptrend, price is between higher highs, higher and higher lows, and I drew it out for you here. Can you see it?
Okay, yeah, I'm saying it.
Exactly. So this is an example of an uptrend. Price was consistently progressing upward, like with higher highs and higher lows. You
Okay, good.
exactly.
Hello, sir.
Yeah, I can hear you.
I think you're in system right now, Shibi.
Yes.
I think it's more easy for you to calculate on your system. I don't think we can, like, to be comfortable for us like this now to identify it on our phone. For me, I don't like, I'm finding it difficult, like, just to zoom in and calculate all the sizes and everything. You get? I don't know.
The more you use it on your phone, the easier it gets. When I first started to, I found it easy analyzing on my system. But now I
Okay, thank you.
I only use my system because of the past. I analyze on my trading fees. My trading fees connected to my phone. It's the same account as logging on my phone, so I can just easily look on my phone anywhere and check the chart, see what market is doing, and then run my analysis off of it.
Okay. Okay.
So
Sir, I have a question.
okay, what's the question?
Okay, most times when the market is creating a higher and higher low,
Yeah.
it's going to continue that way. So if the market wants to reverse, let's just say it's showing sign of reversing and it broke the previous higher low, like when it's on an uptrend, most times it's going to break it and it's going to be as if the market continue the downtrend, then it's now like go back up. So how are we going to identify something like this and avoid it? Because this thing can really blow some people account.
Yeah. So before I talk about that, let me talk about knowing when to buy or sell in the market first in the trends. Are you with me? Can everyone hear me?
I can
Yes, sir,
hear you, sir.
Yeah, we can hear you.
Yeah, we can hear you. We can hear you.
In uptrend, first thing you need to do, I explained that in an uptrend, price is consistently going upward. So since we know price is going upward, we want to be looking for buy. We want to buy in an uptrend. And in the downtrend, you want to sell. So where is the best point for you to sell in an uptrend? We sell along this retracement here, before price continues to push upward. Are you guys with me?
Yes.
Yeah.
Okay. So what you want to basically do is when price is going upwards, you're looking for buying positions. When price is coming down, looking for sell positions. And the best place to sell in an uptrend is after a retracement. So now you ask the question, you said, how do you know when to buy? Because you want to be buying off of these higher lows, higher levels you want to be buying in an uptrend. And in the downtrend, you want to be selling off of the lower highs. So there are different multiple strategies to knowing when to buy. There's a Fibonacci retracement, so they call support and break and retest of support and resistance. There's other blocks, there's supply and demand. We'll be taking them one after the other. But for the sake of this class, I want you guys to be able to identify what we call a strong low and a strong high. Are you with me? Are you guys with me?
Yes, sir.
Yes,
Yes,
we are
sir,
with you.
we see, sir.
So now a strong low in an uptrend is a low that pushes price upward to break the previous high to create a new higher high. Let me give you an example here. So let's say price is in an uptrend, price is going up. Then price does something like this. So in this, you can see that this movement here is different from this straight movement. Can you guys see it?
Yes, sir. We can see.
And the question that person asked me said, how that when price creates a low, a mini high, then comes to break the previous low but continues to push upward. A strong low is a low that pushes price upward to break above the previous high. So in this example now, this first low, this is a low, this is a high. This low is a strong low because it caused the impulsive movement that broke this high here. Can you guys see what I'm showing you?
Yes.
Yes, sir. Yes, sir, we
Yes,
can
sir.
see.
Yes, sir, we can.
Low broke above this high. So in this area here, this low did not break. This low did not push price upward to break above this high. So this will be considered a weak low, and this is an internal structure. In a trend, you will also find internal structures within a retracement sometimes. Are you guys with me?
Yes, sir.
As you can
Yeah.
see, in this
I'm kind of lost though.
I'm also kind of lost here in that place.
I'm kind of
That's
lost.
one.
Can you please like take it again from the first week low, that first one, where the arrow
Yeah.
is?
So
Yes.
I said identifying structural points in market. We've established that we have lows, we have highs, we have higher lows on the left. Now, I want to understand the difference between a strong low and a weak low. So I said a strong low is the low that causes the impulsive move to break the previous high. I repeat. So in this instance, now that we have a low here, but price failed to break above this previous high. This is going to be a weak low. And this is also known as inducement because, like you said, sometimes when we get to SMC, smart money trade, United and the like, you understand what they call inducement and liquidity gap. This is usually a trap set by the major market movers. Because obviously, we're all big traders. We don't trade with as much money as the serious market. The serious market movers trade with billions of dollars. They're the ones that they're the ones that really, really influence this price movement. So, most retail traders like to just buy off these zones along the trend. Then they create something called an inducement, tempting traders to buy from this zone. Meanwhile, it's the weak low that will fail to break this high here. Are you guys with me?
Okay.
Yes.
And what happens is traders that buy here,
Yes, sir.
traders that buy along this road. Yeah. They will set their stop loss just below it, and they will take out the stop loss and continue to go higher. It's also known as inducement. So I was saying a weak low is a low that fails to trigger an impulsive move to break the previous high. And a strong low is the low that triggers the impulsive move to break previous high. It's the same thing in the downtrend. In the downtrend, price is coming down. The price does something like this. Comes down. Plays like this. Plays this. Comes down. Goes up again. And goes down. So in this structure now, can you identify the strong low within this amongst these three, the strong high, sorry, because we're in the downtrend. Can you identify the strong high amongst this? We have one high here, we have one high here, we have one high here. Which one of these will be the strong high?
I think the third one.
No.
Yes.
It's going to be the second one.
Is the second one.
It's the
Second one. Okay.
The second one started the move that broke
The third one.
not the third one, it's the second one.
It is the second one that is the strong high.
Exactly. This second one started this move that broke this previous high. Hi guys with me.
Yeah.
That broke the previous low. No, that it broke the previous low.
Yeah, the previous low. Thank you. That broke the previous low, not high. To create a new low. So this is going to be our strong. This is a weak high. This is a weak high. Are you guys with me?
Yes.
Yes,
So that's basically how you identify market structure. So once we are done with market structure now, I will move on to topics that how you identify when to trade in ways which you can know, oh, I want to buy or sell from this zone. But for now, we need to understand market structure.
Yes.
Sorry, sir. I have a question.
What's the question?
Sorry, I'm still having issue with POS and other blocks. I don't know
He's not gotten to be another block. So.
Okay.
Don't worry, we'll get there. But for now, I'm talking about like the market structure. Does anybody have any? Can you all confidently identify market structure now?
Yes, sir.
We can
Well, sir,
identify. I can identify it, sir, but I don't think I can execute trade on
To
it
some
yet.
extent, yes, we can. I can identify market structure, but my major issue will still be on that. Okay, don't worry. We'll see what we can do about it.
What on what?
sir,
The whole
me personally, I can try my best to identify market structure. Well, so I wanted to ask, like, what is the best time frame that is going to be like most accurate to use and identify this structure? Because sometimes if you use M1, like the 1 minute time frame, it's going to be giving you false signals and stuff like that. So I wanted to ask you so you can like tell us the best time frame to use.
So for your better, it depends on the kind of player you are. Player is scalper. For quick news in the market, you don't want to be looking at the daily time.